Good morning, sir.
Good morning.
Good morning, sir. Good morning, all. Today's morning session from 10 to 1. Subject is direct taxation and internal taxation. Is taken by CMA Parag Soni, sir. Sir's qualification is CA, CMA, Master of Philosophy in Accounts and Taxation, Master of Commerce in Account and Auditing, Diploma in Computer Programming, and Bachelor of Law. Sir, having 16 years of experience in the subject of taxation, financial management, management accounting, and financial accounting. Now I request sir to proceed the session. Thank you so much, sir.
Thank you. Yes, good morning to all of you. And let me begin with one small correction that I am a chartered accountant and not CMA. Please. Oh, yes. Okay. Let me start with today's session that we are going to discuss something crash course about the direct tax and international taxation. My course is divided into total 3 days. So day 1, that is Saturday, day 2 is a Sunday, and day 3 will be the Monday. Fine. So in 3 days, I'm planning to take in that sequence that today I'm going to share a screen right now that we are going to start with the basics of how to file an income tax return, then assessment procedure, and then tax planning. Next day, I'm planning to take a computation of different type of SSE, how to make a calculation of the tax and how the tax liability and everything will happen that we are going to discuss. And on the last day, we are going to have a detailed discussion on the international taxation. See, as it is a webinar system, we are working remotely. Interaction may not be that much 100% possible. So I expect if you have any question, you can ask, and you know it very well. You can drop in this GoToWebinar question session. We are going to take at the mid of the meeting somewhere, or if convenient, we can take at the end of the meeting. So with this, I am starting with today's session. I hope my screen is visible to all of you. Yeah, thank you. Yes, all of you can view my screen properly now. Only one person please confirm so that. Yes, Tanmay, can you confirm that my screen is properly?
Okay, sir. Okay.
Yes. Okay. Thank you. Okay. Yes, the title itself suggests it's a crash course. So would like to say that we will be going fast and to the point. If need may arise, then we may go in detail of some of the section. Otherwise, we are planning to take some of the important sections only one by one. As discussed by the sir, qualification and experience, and as I have said, in day 1 we are going to discuss about return of income. That is your study note number 3. Second one is assessment procedure. That is study note number 4. Next one is the interest part, which I'm planning to take summary of that. And last one for the day, different aspects of the tax plan. So before starting, let me tell you something that when I say return of income and so many things, everybody knows that as per Indian income tax, we need to calculate everything on a self-assessment basis. What we need to do, we need to calculate all the things. That means I need to calculate my all the hits of income and deduction and exemption, whatever is available to me. I need to take on the basis of self-assessment. That means if you are aware and know that income tax return is signed by the SSC, even though it is prepared by the tax consultant or a chartered accountant, even though it is signed by the SSC, meaning thereby whatever stated is there in the income tax return, it is confirmed by the SSC himself. So normally the SSC need to make all the calculation of his own. Clear? So that is the basic thing we need to understand. So starting from the return of income, before that let me give some brief of that. What the person will do, the important thing, he need to decide his assessment year, he need to decide his residential status, he need to decide his different types of income, he need to make a calculation, he can take exemption, he can take a deduction, he can calculate the tax, and accordingly once all the things are ready, we can say that he need to file his income tax return. Fine. So what is the first and foremost thing is he need to decide a year. Why I say year? That today on 7th November, if I have not filed my previous return, I have the privilege that I can file my return of previous year 18-19, that is assessment year 19-20, as well as today I can file my previous year 19-20, that is I can say 2021's return also. Fine. So first you need to decide for which year you want to file the return. Second and important thing is your residential status. If you are a non-resident, then different parameters are there. If you are a resident, some different calculations are there. If you are a resident but not ordinary resident, different calculations are there. So what you need to take into the consideration, first thing is your year, then your status, and then we can calculate the tax. Another thing important, but not always for individual person, or we can say particular SSC, you need to decide that am I a individual, am I a company, am I a HUF, or anything else. So that status also need to be calculated for filing of the return. So filing of the return says that once you complete the basic parameter starting from your status, year, and year, assessment year, you can start with your return of income. Right? Check. Now, first question, as I cannot take a question answer session with you on real-time basis, just try to give answer of your own from your side only. That is it compulsory to file a return? First question. Is it compulsory to file a return? The answer of the same is yes and no. Both the answers are there. Answer says that if you are a company or a firm, what is that? If you are a company or if you are a firm, then you don't get the option not to file a return, meaning thereby you have to file a return if you are a company and if you are a firm. Now company includes all types of companies. It can be domestic company, it can be foreign company, it can be private limited, public limited, not profit company, section 25 company, section 8 company, whatever you want to take. But a company and firm, they have to file a return, that's sure. Second, other than company and a firm, if you are not a company, if you are not a firm, then is it compulsory? Then the provision says that it is compulsory if your income is over and above your basic exemption limit. What is that? If your income is over and above your basic exemption limit. Take a note, I'm using this word, but I'm going to change this word in a minute. What I'm saying, other than a company and a firm, return is compulsory if his income is crossing or more than exemption limit. Now one twist is there. What is exemption limit? Exemption limit is suppose 2,50,000 for an individual. Then is it before deduction or after deduction? So section clearly says that before giving effect. What is there on? Before giving effect of section 54, 54B, 54D, EC, ATC, all this section, if your income is more than the basic exemption limit, it is compulsory for you to file your income tax return. Is it okay? It is compulsory for you to file your income tax return under section 139(1). As all of you are in final, I need not to say, but still I would like to confirm with you people that please take a note. Always remember a section 139(1) because it's a widely used section and it is having a presence in number of different sections. So you need to remember section 139(1) that is talking about return of income due date. Fine. So first, who need to file a return? We have discussed that point. Second, who need to compulsory file the return? Yes, see, here we have discussed who need to file a return. Again, we are saying who need to compulsory file a return. Both the things are apparent. Here in the first slide, I can say that we have discussed to whom they need to file: company, firm, having income or not, other person, having income more than basic exemption limit before claiming all the deductions and effect of certain sections. Other than that, there are certain persons are there who may not have income. They may not fall in the previous slide, even though they have to file their return. Why? Because let us read point number 1. Hold as a beneficiary owner or otherwise any asset, including any financial interest in any entity located outside India or having signing authority on account located outside India. So here we are talking about a person who is a resident, then he is holding some asset. He is holding some asset in USA. Yesterday there was a call from my client who has came back to India in the month of August after completing 10 years in Kuwait. Now he's saying that, sir, I have properties in Kuwait, I have some investment in Kuwait, and I don't have any income over here. He is an individual. He do not have any income in India as far as previous year 2021 is concerned. But as he is owning beneficiary owner or having properties outside India, located outside India, then it is compulsory for him to file a return at least, because in that return he need to show that properties or asset or financial interest located outside India. So we can say that second slide says that it is compulsory for him if he is holding this kind of thing outside India, right? Next, mandatory furnishing of return, seventh proviso of section 139(1) is there. A person other than firm and company. Why I'm using this word or section is using this word other than firm and company? Because other than firm and company, it's a compulsory to file a return even though you have income, even though you have financial interest outside India or not, even though you have property or assets outside India or not, you have to. But other than these two people, it is compulsory mandatory to file a return if you are having deposit on aggregate amount exceeding 1 crore in one or more current account maintained with a bank or a cooperative bank. So situation is what? Try to understand a situation. A person is having a fixed deposit. Sorry, I'm having a person has deposited aggregate value of more than 1 crore in one or more current account. Current account means what? A person is just generally I'm saying a person is doing a business. He has deposited 1 crore rupees in his bank account. His income is hardly 2 lakh rupees, which is below basic exemption limit, even though he need to file a return because he fall somewhere in the seventh provision of the section, which says that if you have incurred such kind of financial transactions also, then you are liable to file a return. You may not have income. Next, who has incurred expenditure in aggregate amount exceeding 2 lakh for himself or any other person on a travel to foreign country. So he has traveled outside India and he does not have any income, but his expense is more than 2 lakh rupees. Then he need to file a return. Has incurred expenditure of an aggregate value exceeding 1 lakh towards consumption of electricity. It means your household electricity bill is more than 1 lakh rupees, or even your office electricity bill is more than 1 lakh rupees, then you have to file a return of income, even though you may have income or not. Fulfill such other conditions as may be prescribed. Now, let me take a pause over here and tell you something, that these conditions are talking about a person who enters into a high value transactions. So what the income tax is willing to do? Income tax is willing to do or monitor those people who are having some high value transactions, but they do not have income. If they have income, they are going to file the return compulsorily under other provisions of the Act. But if they do not have income, which is subject to tax, even though they need to file a return, so that income tax will comes to know that yes, these are the peoples or these are the SSCs having some high value transactions, but their income is low. So they can cross verify with any other transaction that how is it possible to travel outside India exceeding and incur expenditure more than 2 lakh without having income. So there can be different explanations for that, but they want to know that yes, if you do this kind of transaction, there must be a return or income over there. Next one, mode of furnishing income tax return. Yeah, in India, we can file our return by way of paper return. Paper return, I can say physical return. Next one is electronic return with digital signature. Another option is transmitting the data in the return electronically and thereafter submitting the verification of the return in ITR 5. Transmitting the data electronically and verification also electronically. So these are the 2-3 modes are there. So can I bifurcate the return into 2 parts only? First one, paper return, electronic return. What I would like to do, I want to bifurcate the return only into 2 parts. One is paper part, another one is electronic part. Paper part, I think everybody knows. I am filing or preparing it manually and going to submit to the income tax office. Electronically. In electronically, there are 3 different options are there. Electronical with digital signature. Now, what is electronical with a digital signature? Electronical with a digital signature means I'm not going to physically file the same. I'm going to attach my signature digitally. Digitally means if all of you can view over here, yes, you can view this one. It's a simple pen drive type tool. Yes, I hope you can see now. It's a pen drive kind of tool. What you need to do, it is having a certificate which says that this is a digital signature of Parag Soni, having a special password over there which is known to me, and I can apply and I can put a signature on any of the document. So what is electronical return? Electronical with digital signature means I'm going to prepare my return. I'm going to put, instead of putting my manual signature, I'm going to attach the digital signature and it will be filed. Next one is electronical return only, but you are going to verify it. See, in all the forms, last page is there, it is filed by you, and if there is any wrong information, you are liable for it. So what you need to do, it is electronically filed by you and electronically verified. Now, how to verify electronically? You have the option to verify through Aadhaar card, you can file through Demat account, or even you can verify through your net banking account. So these are the different options available to electronically verify the same. Another last option, we have discussed electronical with digital signature, electronical with verification modes, and last one, you have filed it electronically, but you don't have option of digital signature or electronical verification. Option is not available, or you are not comfortable with it. So what you can do is, you can take a print of that, put your manual signature, and post the same paper, that is ITR file, to Income Tax Department, or we can say using the word CPC Bangalore. So there is a centralized processing center, you can send over there and it is verified. Clear? Sure. So that, and next one. Time limits are there. It is not like that you are having unlimited time. You are having a limitation. You have to file your return by the due dates. If you do not file by the due dates, we are going to learn in detail later on that if you are failed to file your return by the due dates, then you are subject to certain interest, you are subject to certain penalties, and provisions are there. Fine. So one by one, we are going to see the deadlines. Ignoring the first line right now, that is talking about 3CEA or 92E, that I'm going to discuss later on, where SSC is a company not having international transaction. What is that? It's a company. They do not have any international transaction. If they have international transaction, then due date is 30th November. If they do not have international transaction, then the due date is 30th September. Next one, any other SSC. So one company, very clear, it's a 30th September. Other than company, whosoever is SSC, I think everybody knows SSCs are firm, HUF, judicial, artificial judicial person, cooperative society, partnership firm, they can be there, including LLP. For them, if their accounts are required to be audited under any law. What is the word? If their accounts are required to be audited under any other law, then the due date is 30th September. Where the SSC is a working partner in a firm and accounts of the firms are required to be audited under any other law, then the due date is 30th September. See, there are three due dates. They are falling in 30th September. One is company, second one who are subject to audit, and third one partners of that firm whose accounts need to be audited. In any other case, the due date is 31st July. In any other case means other than these fellows, yes, individual can be subject to audit, then he may fall in 30th September. If he is not subject to audit, then he may fall in 31st July criteria. Now, let me take a pause over here and give you some different aspects rather than whatever dates given over here. As far as current year is concerned, that is previous year 1920, assessment year 2021, that is due to this COVID-19, this pandemic, the due dates has been changed. They have not changed in the law, they have changed by way of notification under section 119, where the income tax department or CBDT is having a right. You may learn somewhere in the income tax authorities that they have the right to modify the due dates. And because of that, I can say that the latest or new due dates are, instead of 30th September, the date is 31st January. Here also 31st January, here it is there, and here last one is 30th November. So these are some of the changes are there in that situation. Last one, we are going to refer the first line. That first line says that international transaction. So if you are having any international transaction, then the due date becomes 30th November. But now during this pandemic, I can say that the date has been extended up to, I think, 28th February or something. I hope all of you are clear in this part, that whatever I have discussed, I have tried to discuss in somewhat more detail, because being a first half of the conversation, I have discussed that who need to file the written, which are the due dates, who need to file the compulsory written. These are the things we have discussed. Yes. Now let us quickly go through some of the provisions over there where new provisions are there. Section 234F. Earlier it was not there. It has been introduced since last 2 assessment years, which says that if you fail to file your written, if you fail to file your written before the due date specified under section 139(1), if you fail to file your written before the due date specified under section 139(1), then you are subject to some fees. The word is fee. It is not penalty, it is not interest. They are using the word fee of 1,000 rupees, 5,000 rupees, and 10,000 rupees accordingly. 234F, why I'm saying it's very important, because it has been launched with the assessment year 1920 only. Earlier it was not there, so it is there since last 2 years, and where if you file the written after the due date, but after the due date, that is 31st July suppose, and you are filing up to this 31st December, then your penalty may be 1,000, or it can be 5,000 if your tax liability is more. If you file after December before 31st March, then the due date is, I'm sorry, the penalty or fees is 234F is 10,000 rupees. Fine. So there are certain modifications are there, but they are trying to ensure that all people are filing the return in time and quickly. When a return of loss should be filed, or yes. Now one more thing. Yes, all you need to give answer. I cannot view all, but I know that all of you are here and listening me sincerely. Who will be in hurry to file a return? Who is having a profit or who is having a loss? There are two people are there. One may having a loss, another people having a profit, right? Profit, or we can say positive income, and another for other people we can say negative income. Who is in hurry? The person who has incurred a loss is having a loss, so he may not be in hurry. But as far as income tax is concerned, I would like to clarify over here that the person who is having a loss, or if you are having a client who is having a loss, you need to be more careful for him, because in set off and carry forward provision, section 17 and 70 and other section says that if you are having a loss and if you fail to file a return, two situation, if you are having a loss and if you fail to file a return before the due date specified under section 139(1), so I can say I'm talking about the original return, then whatever loss is there of the current year cannot be carried forwarded. So no SSC can take a risk or willing to take a risk to forgo the loss. Is it okay? So those who are having a loss, they take a note and they are very much serious for the filing of the return, because they want to carry forward the loss in the subsequent year so that it can be set off and they can take a benefit of it. Fine. Okay. Next one is belated return. Now what is belated return? Normally I need to file my return by the due date, that is 139(1), as we have discussed in the earlier screen, where I need to pay by 139(1). Try to understand the situation that I'm talking. Let us discuss about the previous year 1819, because 1920 is a different scenario with COVID. In the year 1819, my year is closed on 31st March 2019. I need to file my return by 31st July 2019. Unfortunately or fortunately, I am outside India. I'm not present over here. I cannot calculate my income. So by 31st July, I am unable to give my return in time. So does it mean I cannot file a return? No. The income tax says that you can file a return, but the title will be belated return. and it is filed under section 139 subsection 4. Now, what is the period? Earlier, I'm talking about earlier, that is before previous year 1819, every person or every SSE can file a belated return within 1 year from the end of relevant assessment year. What is the word? From 1 year from the end of relevant assessment year. So other way around, I can say that if your previous year is 1718, your assessment year is 1819, 1 year from the end of the assessment year, it means 31st March 2020. So normally the person was earlier getting 2 years, to file a return. 1718 return, he can file up to 31st March 2020. But since the last 2 years, there are some amendments, and they have said that you can file your return before the end of the assessment year. What is that? Before the end of the assessment year. It means if I'm talking about previous year 1819, then I can file my return by 31st March 2020. So only 1 year time is available. Earlier 2 years was available for filing the belated return. Clear? So this is that. Next thing, before going with the charitable, let me jump directly to the revised return 139 subsection 5. Now try to understand the situation. I have filed my return, and later on I found that there was some error. Some income I failed to declare in my income, some expenses I failed to claim, some deduction I failed to bear, some clubbing of provision I failed to do for my daughter. Then what? So if you think that whatever return you have filed, it may be original, it can be belated. There is one twist we are going to discuss once I complete revised return. If I have filed original return or if I have filed belated return, I can make a correction of that in revised return. One more thing, revised return substitute the original return. It means whatever is the original return will go away and new return is going to take place instead of that. One more thing, for revised return also, the due dates are same. You can revise within 1 year, that is to say before the end of the assessment year. Fine. Now let me give you the twist. Now what is the twist over here? Whatever I have said for belated return and for revised return, I have said a flat things. I have said you are going to get which period? End of the assessment year. In both of the situation, belated as well as revised, I have used the word end of the assessment year. Right? Now, what is the situation? End of the assessment year. But if you read the book, if you read the section, they are using different word. They are saying that belated return, revised return can be filed before the end of the assessment year or before the completion of assessment, whichever is earlier. So if the income tax department initiate the assessment in your case, then you are not going to get a time up to complete assessment year. So that is a minor change over there. Now one more thing, very frequently asked question. I'm going to ask you all people, you need to answer. I cannot view, but you can take your own self assessment that to what extent you are right. Can I change belated return? So situation is what? I have to file the return under section 139(1) by 31st July. I failed to file by 31st July. I have filed somewhere in the month of August. Now in the month of August, I have filed a belated return, and again I have made some problem in that, and I want to make some correction in that. So can I revise the return? All of you can ask to yourself, and then I'm going to give you the answer. Before 2 years, that is before previous year 18-19, assessment year 19-20, you cannot change the belated return. Now, with effect from 1st April 2018, that is assessment year 19-20, they have made some correction that belated return can also be revised. One more small question: how many times I can revise the return? So they are saying that there is no limitation. You can revise your return as many times as you wish. Is it okay? You can revise your return as many times as you wish, subject to the due date. And what is the due date? Due date is the end of the assessment year. Got the point? Okay. Next. Defective return. Now, what is defective return? Defective return means you may have filed your original return, you may have filed your belated return, you may have filed charitable trust return, you may have filed your revised return, any return is there, and there is some defect. Now, what is defect? Normally defects are arithmetical defects, there is some calculation defect, there is some deduction defects. See, one more thing I would like to clarify, that now in the era of electronical written filing system, it's normally not possible. I'm using the word normally, not always. Normally not possible to have some defects. Example, I think everybody knows section 80C. Yes or no? I can say yes or no, you at your place. Okay, so that you can remain live as well as connected with me. What is there on 80C? You know the deduction, and maximum amount available under section 80C is 1,50,000. Agree, everybody? Yes. What is there on under section 80C? The limit is 1,50,000. My father, who is a retired person, whose income is only pension income, he is willing to file his paper return. As we have discussed earlier that I can file paper return also. He is willing to file his paper return. Yes, he can file as per the rules. It is allowed to him. So what he is doing, he is saying salary. In that he is writing pension income, and in deduction, instead of taking 1,50,000, he has considered 1,60,000. He has not done it intentionally. His investment is more than 150. His actual investment in LIC is 160, or NSC or PPF is 160. So unintentionally or by error, he has taken 1,60,000, which is not available. If he is filing in electronical form, error could be avoided at the time of filing itself, but he is filing paper return, so there could be error. So once the return is received at the department, they can say that this return is defective. What is that? This return is defective. Then they give it you back with a tagline or with a period that you are free to modify it within 15 days. Now you can see over here, when a return is termed as a defective, a return is said to be defective where all the following conditions are not fulfilled. One is without payment of tax, defective. Any annexure, statement, columns not included or not fully calculated. A statement showing computation of tax liability. If you are subject to audit and you fail to submit the audit report, you fail to attach the TDS certificate, and some other things are there, that if you fail to do this one, then we can say that this return is considered as a defective. Agree with this? Yes. Now, defective return is nothing serious blunder. It's an error, not a blunder. So the income tax is also going to give you the intimation ki, sir, we found that you failed to attach audit report, you failed to make some minor calculation, you have taken 1,000 instead of 100 rupees, or like that. So we request you to modify it. So what we need to do, we need to make a modification, and we are going to get 15 days for that. And once modification is done, we need to refile it. So that written is called defective written, and you need to rectify the defect within 15 days. Clear? So these are the things. Going ahead with the returns only, verification of the return. Now, who is going to verify the return? It's a very nominal section point is there, so I'm just going to give you the brief of that. Individual खुद कर लेगा. If he is a minor, then parents or guardian. If he is mentally retired, yes. Sometimes it happens that a person is there situated in USA. Now it's electronical world, you can transfer mails and everything is online, but I'm talking about 5-10 years back when the returns were or things were not online. So at that time what he can do is he can give some power of attorney over here, so the person who is authorized can do a signature, right? Same way HUF, I'm ignoring this part. HUF, firm, limited liability, political party, these are the person who is going to verify the return. Verify the return means they are going to check the return and put their signature on that. Yes, new provision has been added over here, quoting of Aadhaar number. Since a number of years or 3-4 years or more than that, the income tax has started linking PAN number and Aadhaar number. What they have done? They have started linking your PAN number and Aadhaar number so that all the real-time data can be accessible to the department here and there. The date has been keep on extended because of number of reasons. So they say that a person who is eligible, see one more thing, income tax doesn't say anything about the Aadhaar card. They are saying that if you are eligible to take Aadhaar number, if you are eligible to take Aadhaar number, then it is compulsory for you to quote your Aadhaar number over here. If you need not to show over there, then need not to worry. But if it is eligible, you are eligible and it's compulsory for you to take Aadhaar, then it is compulsory to quote over here also. Fine. So these are the things. Sometimes it happens, very practical situation I'm explaining. Sometimes it happened that I have applied for the Aadhaar card, but Aadhaar is not received. Situation, I have applied for the Aadhaar, but Aadhaar is not yet received. What I can do is I can give my reference number. It is also enough. Fine. Yes, I think with this we have tried to complete the return of income of that. What is the due date, how you can revise, how you can file, belated return, defective return, and some of the basic assets. Now see over here, till this time, SSC himself, what is the situation? SSC himself is doing all the formalities. SSC is going to prepare his return, SSC is going to put his signature, or authority person can do. All the things are done by the SSC himself. Now once the assessment is over, once return is filed, then the role of the income tax will start, right? So until the time of filing of the return, it is the role of the SSC. When the return is filed, the role of department, that is income tax department, income tax officer, income tax inspector will start. That procedure is called assessment procedure. Fine. Okay, going ahead with this, I think till this time nobody is having a questions, so okay, yes, we have completed this one normal small session of return of income, and there are certain questions are there. Let me answer this question one by one quickly. See, it may possible that I may not able to close all the answers, but we'll try to cover the majority of the questions over there. Will section 235 F apply for belated return? Yes, it is applied for the belated return. Belated return is the return you will be given some extra time to file a return, but yes, with subject to some price. So you 234 is applicable for belated return also. Yes, revised return can be revised n number of times. Yes, answer is there. You can revise n number of times. Okay, one Arjun Khurana has asked, so if I do not intend to file on time, can I file anything incorrectly followed by filing a revised return within its extended due date? Yes, answer is right. You are not intending to file your return. You file once and then you keep on changing the return and return. Please take a note, practical situation very clearly telling to you, Arjun Khurana, that if you file your return and if you revise for twice or thrice or at least what is written and what is your revised return, is it okay? They are there since 1961, right? So what they are going to do, they are going to see what was your original return and what is your revised return. They are going to check, is there a genuine error? If they think that no, you are doing plus and minus just like that, chances are there your case will be selected for the scrutiny. So one should be very careful for doing that. Yes, you have said to avoid the penalties. Yes, you can follow that method, but it's not a right method. You may land up somewhere in the bigger trouble rather than to avoid a penalty of 1,000 to 10,000 maximum. One question is that asked by Rutuja that for every revised return we need to quote the acknowledgement number. Yes, you for every revised return you need to quote the acknowledgement number of the previous return, not original return. Take clear? You have filed original return, then you are revising for the first time, you quote original. Second time you are revising, you quote the last one. Next time you are revising, you close the last one. So you need to file the last one. Uh, can you please repeat the due date of return for an individual correctly? See, the return due dates are 31st July normally. It has been extended by 30th November previously. Because of the COVID, it has been extended to 30th November. Okay, in examination, which due date you need to quote? See, in examination, you can quote the original due date, and if you know it, you can write that due to COVID or due to notification, these are the due dates extended. Yes, if I'm not wrong, I would like to clarify you that as per our examination pattern, yes, someone from the institute side may correct it, but I, to the best of my knowledge, I'm saying that as far as our examination system is concerned, they are saying that any amendment up to 6 months is not expected to be asked or to be right properly in the examination. So these are the latest amendments in the month of June or amendment recently made in the month of September or October. So if you are going to write the original due dates, nobody is going to say no to you. Okay. So concluding with the questions, I hope I have tried to taken majority of the questions. Yes, going ahead with assessment procedure. Now, what is the assessment procedure? Assessment procedure, first one is very important, and that is the starting point of the any of the assessment. First one is self-assessment. Now, what is self-assessment? Self-assessment means person has to make the assessment of his own. He is going to calculate own income. He is going to calculate ATC, ATD, and all the section of his own eligibility, not eligibility. I think everybody knows ATG. In ATG, it is available 100%, it is available 50, it is available 100 with limitation, it is available 50 with limitation. So you need to calculate, SSC need to calculate of his own which criteria fits to him, and accordingly he can make a self-assessment and prepare a return and file it. So first one is self-assessment. As we are in the crash course, I'm going to pick up so many things all together. I think everybody knows TDS. Yes or no? Everybody knows TDS. Everybody knows advance payment of tax. And third one, if you're able to recall, self-assessment tax. Yes or no? So there are three types of taxes there, and which relates to the self-assessment itself, that you have made an assessment and you are saying that this is my tax and I have done this here. So this is that. So one assessment is done by the individual person itself, and one more thing, you may not have the idea, but as and when we are going globally, the income tax department, if you have heard the budget speeches also, they are saying that we believe that and we are going to assume that all our SSC are honest taxpayers. What is the word? All our SSC are honest taxpayer. So unless until something different is arises, we assume that whatever you have calculated, it is right. So that's why first section 140 is very important. That is talking about self-assessment, right? Next one, intimation or assessment by income tax department. Next one is inquiry before the assessment. These are the different sections are there, or types of assessment procedures are there, which we are going to learn one by one. Fine. So first we have discussed, that is called self-assessment. Self-assessment is done by the assessee himself, right? Okay. Now intimation or assessment by income tax department. Now income tax department is giving intimation to all the SSC. What is there? It is giving intimation to all the SSC electronically. What is there? Electronically, no human intervention is involved over there, and they are there or called under section 143(1) intimation. What is there on? It is 143(1) assessment, where government income tax department is going to throw a mail to you that, sir, as per our calculation, these are the details. Okay. If you allow 1 minute, let me share something, or let me show you what is intimation. See, all of you could have done computation of income and everything, but you may not have seen sometimes physical this 143(1) and that. That's why I'm taking some time over here more, and going to take a less time at the time of doing computation of total income. You can see over here, centralized processing center, Bengaluru, intimation under section 143(1). You can see the client name, you can see the assessment year, you can see clearly over here. All of you take a note. I hope it's visible to all of you, right? Original written. If it is a belated, then it is belated. If it is a revised, then it's going to say revised. Some basic parameters has been given to you for that. Now what is 143(1)? Shortly I'm going to discuss. They are going to prepare all the computation by this two column. One, as provided by the taxpayer in return of income, जो SSC ने खुद दिया है in section 140 self assessment, and this one as calculated by the department's computer. They are not going to use the word for computer, but I would like to say that it is a computer generated. So if there are some error while making calculation error, arithmetical error, or any other small errors are there, it is caught by this intimation and says that yes, what is your rebate? 851, but according to them it is 852. What is the refund? If it is a refund is there, they are going to say that according to me this is the refund, according to you this is the refund. Is it okay? So they are going to give you the whole full page, and they are going to say yes. If you have any problem, if you think that something is not right over here, you can ask, or you can go for 156, 154, you can go for rectification or revision in this kind of thing. Fine. So this is that. Coming back to the presentation. So 143.1 is what? It is an intimation sent by the department electronically. It is nothing but a comparison of whatever you have filed and whatever we would like to say. Right. Next, scrutiny assessment. What is scrutiny assessment? If they think that your accounts, your expenses, your deduction, your claims, your rebate need to be verified personally. I am wrongly using the word personally. Take a note. I am wrongly using the word personally because nowadays it is a faceless assessment. So there can be online or it can be offline, right? So 143.3 says that if they found that your detail verification need to be verified by the income tax officer, then they are going to make one scrutiny assessment. So one is intimation. It is done by 100% people. Majority, they are sending you the 143. Scrutiny assessment. Scrutiny assessment means what? They are going to select some of the SSC whose record need to be verified. They have n number of data. By the verification, if they think yes, your return required to be verified, then they are going to select your case. Next one, best judgment assessment 144, that we are going to learn later on. If you fail to do certain kind of thing, then they can do 144, that is best judgment assessment. It is also known as a ex parte assessment. Next one, income escaping assessment. So there are four kind of assessments are there. One is intimation, it's a first stage. Second one, scrutiny, if you are selected based on your transaction, deduction or something, then it's a scrutiny. Best judgment, again, if you fail to comply with certain thing, it will go to 144. And 147 says that yes, exceptional case. What 147 says? Exceptional case, you failed, means department failed to check your previous year data. So we are going back 4 years or 6 years for the re-verification. That is called income escape assessment. Right? If all of you are clear with this three, then I'm going in the detail of that. Inquiry before assessment. See, income tax department is not free to do scrutiny assessment or best judgment assessment for any of the SSC. No. If they have certain information with them, if they have certain things with them, then and then only they are going to make a scrutiny assessment or any other assessment. Intimation, yes, I have said as earlier, it is common and given to all. But remaining three, it is only with specific criteria only, right? Now, what is there on? See, it's not like that all person are not willing to file the return. They are avoiding tax or hiding tax. No, it's not like that. Sometimes it may possible that there can be genuine situation where they failed to file their return. So there is one small provision is there, inquiry before assessment, because we are in India, it's a democratic country and every person will be given a chance of being heard. Yes, you can view point number 4 over here, opportunity of being heard. It's a very important in our country. It is a constitutional right that before penalizing anyone, you need to give a chance that what is the problem with you, sir, that you failed to file a return. So they are saying that inquiry before assessment. So if you do any assessment before that, you need to issue a notice under section 142(1), and you can say that, sir, you failed to file a return by the due dates. If you failed, actually file a return, and if you filed and we do not have a record, kindly provide us your return. Same way, they can say that your accounts need to be audited account documents need to be verified, so kindly provide the same. So they are going to issue a notice before any of the assessment. So that is called inquiry before assessment. Intimation, as we have discussed, time period is also given over there. 1 year is available. Yes, I'm not going in detail of 143.1. It's very common. Scrutiny assessment, that's very important. And as per the latest information or records by the income tax department, they are saying that they do not take scrutiny cases more than 5%. So the scrutiny cases selected across the India is less than 5%. So only 5% of the SSC are selected across the country. And I think one word is not mentioned over here, or not maybe there in your book or reference book. It is selected based on CASA, computer aided scrutiny cases. All the scrutiny cases are now selected based on the computer aided system, artificial intelligence, or any other method you can say, but it is not done manually. Normally it is done by computers, that this SSC case should be selected. Now what is the 143.3? What is scrutiny assessment? Why they are selected? They are going to be selected where assessing officer or the prescribed income tax authority consider it necessary to ensure that assessee has not understated his income. He has declared all the income. Declared excessive loss, he has not declared the excessive loss, and he has not underpaid the tax. So if they want to consider these three criteria, number one, understated his income, number two, declared excessive losses, number three, underpaid the tax. If the three situations are not there, if means they want to cross verify it, then what they can do is they can make scrutiny assessment. He can make a scrutiny in this regard and gather such information and evidences as deemed fit, and on the basis of that information shall pass an order under section 143.3. They can pass an order that, sir, in your case we found that you have claimed higher exemptions, you have paid lower taxes, these and that. Is it okay? So 143.3, what is there? If they have, I'm not saying they have doubt, if they want to verify, they are not using this word, it's wrong. No, they want to verify based on information, based on cross connectivity. We found that we want to verify your income, expense, and taxes. Clear? So what they will do, they are going for a scrutiny assessment. Now what is the scrutiny assessment procedure? Condition for scrutiny assessment procedure is written must be filed. If written is not filed, you cannot go for 143.3, you need to go for 144, right? If written is not filed, then what is the assessment option available? 144, that is called best judgment assessment, because we don't know what is income at all. So if you want to go with 143.3, written maybe under section 139 or maybe under section 142.1 is coming. Fine. Next one. Assessing officer considered it necessary or expedient to ensure that SSC has not this procedure, is going to issue one notice. What he's going to do? He's going to issue one notice under section 143.2 that, sir, your case is selected. Your case is selected for the scrutiny under section 143, and we request you to provide this amount of information. Now, it is not stated in this slide, but I would like to add additionally with reference to reference book and study notes that nowadays this assessment, that is scrutiny assessment, is again bifurcated into two parts. What is that? It's again bifurcated into two parts. One is limited scrutiny, another one is a full scrutiny. Is it okay? What is there on? One is limited scrutiny, another one is a full scrutiny. Now what is limited scrutiny? If the department is having a problem only with particular 3 or 4 transactions. A company is doing a business, SSE is doing a business, his sales is proper, his P&L is proper, taxation is proper, but they feel that whatever loan they have taken, it is wrongly taken, or we can say the mode is not proper as per 269 SS, or repaid not as per section 269T. If they feel that they want to cross verify only those transactions, they are going to issue this notice under section 143(2) with a title. What is the word I'm using? With a title stating that, sir, your case is selected for scrutiny and it is a limited scrutiny. What is the word? It is a limited scrutiny, and we want to verify transaction relating to acquisition of fixed asset, transaction relating to the royalty payments, transaction relating to unsecured loan, transaction relating to the foreign sales. That's it. So if they are going to write the word limited along with the transaction or nature of transaction, it is very clear that they don't want to go in other details. They don't want to verify all the things. They only and only wants to verify particular transaction which mentioned in the notice. Clear? Yes, all clear? Yeah. Next point. If they want to go with full scrutiny means come with all your books of accounts and documents. We are going to ask the question on any of the topic. It can be sales, it can be expense, it can be loans, it can be taxes, anything can be there. So that case is called full scrutiny, right? So here in this case, whenever they are going with 143.3, they are going to bifurcate that. Is it a limited? Okay, if it's a limited, then they are going to write the transaction. If it is not limited and full scrutiny, they are going to write the word full scrutiny, right? Sure. Next. Is there any time limit for issue of the notice? The answer is yes. No notice shall be served on the SSE after expiry of 6 months from the end of the financial year in which the return is furnished. Repeating once again, no notice shall be served on the SSE after the expiry of the 6 months from the end of the financial year in which the return is furnished. Okay, let me give this example. My financial year 1920, due date of filing return is, suppose I'm talking about the book right now, not the notification, so 31st July, and I have filed my return in 31st July 2020. Is it okay? I have filed my return on 31st July 2020. So notice can be issued up to which date? Can anyone calculate? All of you, please do calculate the due date in your mind. I'm going to discuss right now. 6 months from the end of the financial year in which return is furnished. So I have filed on 31st July 2020. So my financial year is, they are not using the word previous year assessment year here. They are using the word financial year. So what is my financial year? My financial year over here is 2021. What is financial year? 2021, in which I have filed the return. Now they can issue me a notice up to 6 months. That is, I can say 30th September 2021. So if I have not received any notice up to 30th September 2021, I can say that, not assumed always, but I can say that yes, practically my case is clear for the year 1920. Is it okay to all of you? Yes. So what we have discussed in 143.3, we have discussed for which purpose 143 is required to be done. Notice need to be issued. Timeline is there. What is the timeline to issue the notice. Fine. So these are the things for scrutiny assessment. Okay, now what we are going to do in scrutiny assessment? What is the procedure? In scrutiny assessment, the income tax department is going to issue one notice in 143.2. That's a, you need to come with this documents. SSC will come with the documents and is going to produce before you. And as an income tax officer, you think that, no, I want some more document. So you can give a next hearing date and you can call for the documents. If you think that the document received by you or provided to you by him is not proper, you think that they are not clear, then you can make or call third party. What is the word third party? It means, let me give a simple example. My scrutiny is going on and I have provided some bank statement. I think everybody knows now in the digital area, I'm not going to get physical statement of the bank statement. I'm going to get in the mail. So I have taken a printout. Income tax officer feels that while doing printout, I have done some editing. So they want me, or they feel that these statements are not right. So now what he can do, he is having a right under section 133(3)(6). What is the section? Under section 133 subsection 6, he is having a right to call third party documentation. So what he's going to do, he's going to write directly to the bankers. To whom he is going to write? He's directly going to write to the bankers. Sir, scrutiny of Mr. Paraksoni is going on and I want his bank statement. Kindly provide the bank statement. So they are going to provide the bank statement to those people. So they can do like that. Yes, one more question to all of you. Please answer at your place, all of you, that can I write my accounts in different language? Like, can I write in Tamil? Can I write in Sindhi? Can I write in Malayalam? Yes, I am free to prepare my books of account in any of the language. If I think everybody, sometimes people might be aware that in some of the people, like Muslims are there, they are writing from back of the side. If you are talking about this Gujarat people, then they are preparing the books of account somewhere from the Diwali. They do Chopra Pujan and write in red color books. So everyone is having their own style of preparing the books of account. Now, what is the problem? The problem is while doing the scrutiny assessment, the income tax officer could not recognize your data. He fails to understand your data. कि sir क्या लिखा है समझ में नहीं आ रहा है. What he can do, he can order you. What he can do, he can order you. I'm showing you the section particularly. He can order you to get your books of accounts. Point number 3. He can order you to get your books of accounts audited. वो आपको बोलेगा कि sir, I'm not able to understand your document. Do one thing, take an audit report. And one more thing, audit report cannot be in vernacular language. Audit report can only be in Hindi or in English. So the officer can able to understand that. So he can give order to make your books of accounts audited. Another thing, he can check you on oath. So you have to take an oath and you have to give a statement also, and accordingly is going to conclude his assessment that why not your income should be added by this or not, or you are clear, whatever they're on, they can give the order. Fine. Let me show you if I have available. Yes, all the data are relating to some clients, so ignore the names and this all. You can see over here what is written over there. I hope all of you can view my PDF file. I'm showing you some real-time data of the clients. Status is a company, assessment here is this, residential status this, nature of business this, date of hearing as per record, date of order this. You can view over here 13 number point. They have said that section and subsection under which the assessment was made. So they are saying that assessment was made under section 143 subsection 3 and it's a limited scrutiny, and he is going to issue a assessment. Clear? Yes, you can view this word also, CASA, computer aided scrutiny cases, and he is going to write the whole story. Sir, we have called you on this date, you have produced this, and joint commissioner is going to put his name, and at the end of that he's going to say that now as per new calculation your tax liability is 71,070. Is it okay? I hope all of you are clear. So he based on the scrutiny assessment, he is going to tell you that this amount is payable to you. Now one more section along with it, let me close. One more section is there called section 156, which we are not going to discuss separately later on. हम नहीं पढ़ेंगे, that's why I'm sharing along with 143.3. Along with 143.3 order, he is going to give you a notice of the demand that, sir, I'm issuing the demand letter also that whatever calculation I have made, that is 71,000, is required to be paid within how many days? 30 days. On the receipt of this notice, you are required to pay within 30 days. Clear? One more small topic I would like to add, as I have discussed or taken this real-time data. Do you think assessee will agree whatever income tax officer says? No. Assessee may sometimes not agree on the part whatever is stated by the income tax officer. So he can say that, sir, I don't agree with this order. I don't like this order. I don't want to pay 71,000. Why? Because you are wrong. What are you saying? You are wrong. So at that time, the income tax officer, I'm sorry, the assessee is having a right. See, read number 7, all of you. All of you can read it along with me. The amount has become due as a result of this. Sorry, I think it is, it should be point number. Okay, the same point should be there. Yes, this is that. If you intend to appeal against the aforesaid order, they have given you the order and these are the consequences that you have to pay 71,000 as a consequence of the same. If you think you are not satisfied with my order, and if you think or intend to go ahead, that is against the order, you can go in income tax appeal. So if you wish to go in appeal in aforesaid order, you may present appeal part B of chapter 20 of the said act to the tribunal within how many days? 60 days. So if you think you are not satisfied with this assessment and there is some bias or there is some technical error, you can go further in appeal and within 60 days in form number 36 over there. So what you need to do, if you're not satisfied with this order, you can go ahead. Yeah, so coming back. I hope all of you are fine with this. So we have cleared about the scrutiny cases. Now, as I have taken your data from the module, I would like to go to the module now in page number 120. Yes, I think this one is there, 143.3. We have discussed, yes, condition, notice can be issued, order can be made. Yes, now see, what is the time limit? Now see, if you have heard the word charter, if you have heard the word charter of income tax department, that means The department, income tax department, is also time bound. They have to complete certain assessment and things within a limited time frame. Now, what is the time frame? The time frame is 143 order need to be completed within 12 months from the end of the relevant assessment year. From the end of the relevant assessment year, they need to complete within 12 months. Okay. These are the special procedure. I'm not going in that detail, but this is that. New scheme of scrutiny. Yes, as we have discussed earlier also, okay, now in the new scheme of scrutiny, now it is going faceless. That means you can see the word technological. That means, see, income tax department and government found that if there is one-to-one transaction, if the assessee and income tax officer are meeting one-to-one personally, then there is a transaction that chances are there that transparency and accountability is not maintained. So it's going to impact the efficiency, transparency, and accountability. To remove it, they have said that we would like to go faceless. Faceless means what? Yes, can anyone? Yes, all of you try to understand what is faceless. Faceless means assessee is not going to meet the officer personally. Officer is not going to see you personally. He is not going to talk to you personally, but it is done by the technological interface. Now, what is technological interface? Try to understand. It is not the way we are doing one-to-one. No, it can be, but not apparently not. Whatever is the issue is there with the income tax officer, grounds are there for the scrutiny, he is going to issue a notice. What he is going to do? He is going to issue a notice through electronical mode only. What is the mode? It is electronical mode, and he is going to get in his account. In his account, like mail, we are getting the mail inbox. You are getting one mail, sir, there is a mail from XYZ. Same way, in income tax login, you are going to get one notice. Sir, comply with this. Now, what the assessee need to do? Assessee need to comply within due time frame. Within due time frame, he need to answer it electronically only. That means he need to reply, he need to attach the documents, and he need to provide his explanation. So no one-to-one transaction is there. So that is the biggest benefit of that. Now, what is the benefit? Now see over here, I am doing a job. I am a salarized person. I don't find any time to go to the income tax department, to attend the hearing, and to wait for the sir to give me time to hear me. So what I can do in electronical mode, what is the benefit of the faceless assessment? I can reply. I can reply to the income tax department 24/7. Suppose I have received a notice and the due date of replying is 10th of November. What is that? 10th of November. I am free. I am free to write my reply at 12 in the night or 5 in the morning or 3 in the afternoon. Nobody is going to ask me to come personally. So there is a time saving, there is a transparency, there is a accountability. Accountability, it means that the officer has seen your data and verified it. So later on, he can't say that I have not seen, because everything is going on or everything is coming through only digital mode. Fine. So this is that. So this is a faceless system going on very effectively. So that is the new scheme of scrutiny. Going ahead with the base judgment assessment. Now, what is base judgment assessment? Sorry. Base judgment assessment, they are saying that, as we have discussed two assessment right now. I hope I'm not going too fast as well as too low. First assessment we have seen, that is 143.1, that is intimation, which is a commonly thrown message by the software where computation of your and department is given comparatively. Second one, few people are there, few SSEs are there, there is some issue, and that's why they want to check you. So your case is selected. Fine. So that is that. Next one, best judgment assessment. I think everybody might be aware of what is best judgment assessment. Best judgment assessment means that a person has not filed a return. If the person has not filed a return and the department is of that opinion, income tax is of that opinion, you have income and not disclosed. You have income and not disclosed. How is it possible? You have income and not disclosed. It means I am filing my return regularly. I'm filing my return regularly since 10 years. This year I have not filed. So income tax can give me a notice. We just have gone through that notice under section. I hope you can view this one. Point number B, 142.1. That is, as we have discussed 5-10 minutes earlier, that notice before initiating any proceeding. Before initiating any proceeding, income tax will say intimation dega ki sir, we found that you failed to file a return. If you think, please do file. So that is notice. Notice is issued, but the SSE is not replying. So there are certain situations are there which force income tax department. I'm using the word which force income tax department to go for best judgment assessment. I'm going to use the word ex parte assessment. Ex parte means one way. You have not been given a chance, or you are not going over there. The assessing officer himself is going to decide, yes, sir, this is your liability and this is not liability. Point number 1, you have not filed a return. You can see point number 1 over here, which says that which return is not filed. You have not filed original, you have not filed revised, you have not filed belated, you have not filed loss, means all the due dates has crossed and you fail to file the return. Then yes, we can do 144. Next one, we have sent you the notice. We have sent you the notice under 142.1. Sir, you are having a taxable income, but you are not filing. Yes, again 144 is possible. Third situation, your scrutiny is going on. Say for example, your scrutiny is going on and we have informed you, sir, make your books of accounts audited. Which section is there? Section 142 2A, which says that you need to get your books of accounts audited, but you fail to do that. Another situation, we have informed you to be remain present. IA, provide the documents, provide the evidence, but you fail to do that. So in any of the 4 situations, which they are, number 1, no filing of the return, number 2, not complying with the notice under section 142.1, that is for filing of the return, not complying with the section 142.2A, that is called audit. Another one, not complying with the attendance or submission of the documents under 143.2. If the income tax department found that if these are the situations you fail to comply with the all, then they can do your best judgment assessment. That means without your presence, without your document, they will decide, sir, your income is, sir, your income is 25 lakh rupees, on which tax is payable this. As per our records, already you have paid a tax by way of TDS X value, so balance amount is paid. Is it okay? Balance amount is payable. So this one is a third party assessment, or rather, sorry, ex parte assessment, where you are not involved and it's done. I hope it's clear. Whatever is the timeline of 143.2, the same timeline is applicable in 144. I hope it's clear to all of you. Yes. Yes, you can see over here. Timeline is again 12 months from the end of the assessment. Now in between they have provided you a small section, section 144A, that is talking about the powers of the commissioner, reference to resolution panel. Yes, sometimes there is another word is also there, reference to valuation officer. Okay, so that can also be that. Okay, coming back now, what we have yet seen, क्या देखा है? One, 143.1, that is assessment. Second, scrutiny assessment. Another one is a 144, it is there. This all, I'm going to use different terminology for this. This all are said to be a regular assessment. What is the word? Regular assessment. Another one is 147. They are using the word escape assessment. Now, all of you think for a minute. All of you focus here, concentrate here. Yes, one more thing I would like to request you all people, we are going to be here for around 3 hours at a stretch. So you feel sometimes you are not connected. So that's why I wish try to be connected and be over here. What is there? Sometimes it happens that there are certain deadlines are there. As I have discussed, what is the deadline for scrutiny assessment? Can anyone tell me? बोल तो नहीं पाओगे just but you think of yourself that income tax department is willing to do a scrutiny assessment. That is 143.3. What is the due date? The due date is 6 months from the end of the financial year in which return is filed. What is the period? The period is 6 months from the end of the financial year in which the return is filed. Income tax department failed to issue the notice. What is there on? Failed to issue the notice, and that period has gone. Now, income tax found some information. Income tax found in some search or survey data that there was, I'm using the word there was, some tax liability which escaped. What is the word? You can very well connect with each and every word. Which escaped our eye, which escaped our assessment, and time is also crossed. Time is also crossed, but we want to do your reassessment. What we want to do? We want to do your reassessment. At that time, the income tax department is having a power under section 147 to issue a notice for the year or years, or the year or years for which tax has escaped assessment. Is it okay to all of you? Tax have escaped assessment. Now try to understand the seriousness of this section. This section is talking about old years data. It's not regular. Regular is 143.3. Regular is 144. Regular is 143.1, which is having a right to the income tax officer to initiate so many things. But this one is a special provision. The limit to issue notice has crossed, and now you think that no sir, there is some liability. So at that time, some permissions are required. Income tax officer cannot do the same. Permission is required from the joint commissioner or higher authority. Yes, permission, yes, you can see over here, directly going with this table. Notice need to be issued. We are going to see the timeline later on, but just try to see over here where assessment has escaped under section 143 or this up to 4 years, any amount. If you have any amount, then up to the 4 years period, assessing officer with the prior permission of whom? Joint commissioner. So you can be very clear that assessing officer is having no right now. He must have a permission of whom? This one. Beyond 4 years and up to 6 years. So they can go back up to 6 year, they are saying that if you want to go back, beyond 4 years and not exceeding 6 years, so there is one condition, primary condition. Precondition is that the amount should be more than 1 lakh. Tax liability which escaped is likely to be more than 1 lakh. If you think that the liability is not more than 1 lakh, then you cannot open the assessment. 4 years are crossed, and if you think the tax liability could be there of 75,000, no, you can't do that. 75,000, 80,000, no. 2 lakh rupees, yes, you can do. So what is the basic thumb rule? The amount escaped, tax amount, should be more than 1. Now the joint commissioner is also not eligible here. Permission of whose permission is required? Principal chief commissioner or chief commissioner or principal commissioner over there or commissioner. So you have to take prior permission of these people, and as an income tax officer you have to convince those people that, sir, there was some tax liability which escaped assessment and we want to reopen it. So that's why nowhere it is said over here, but we can say 147 is a reopening of the cases. Fine. So we have seen that over here, of which 143 and 147 has already done. If assessment has not been completed under section 143, then up to 4 years, any amount, yes, same story is there. 4 years to 6 years, again the same is there, right? And here up to 6 years, if a person whom notice is to be served, yes, 6 years, you can go like this. So these are the different parameters are there, and authorities are there who are going to issue the notices, and they can do the assessment. Now if you want to do the assessment under which section? 147, then you need to issue, what you need to do? You need to issue a notice under section 148. Which section is that? Section 148. You have to issue a notice that, sir, based on records, we found that some income escaped assessment. Take a note, all of you, please take a note. In 147, SSC can always ask, for grounds. What is the word? The grounds, or I can use this word for reasons. Sir, why? What is the reason? Where you found that income has escaped assessment, an income tax officer is also duty bound to provide the grounds of reopening. So he need to provide the grounds. Sir, these are the reasons why we have reopened your case. Clear? Check. Now again, same story. He need to issue the notice, he can call for the documents, and accordingly he need to close the assessment. Fine. I'm not going in now that much detail as required. Now time limit is there. Yes, we need to see one section, probably 151 or 153 is there, which is talking about all the deadlines, that no order of assessment or reassessment shall be made under section 147 from the expiry of 9 months from the end of the financial year in which notice under section 148 was issued. So we can say that effectively they are going to get full year plus 9 months. Is it okay? So these are the time limit over there. Period excluded from the time of completion the assessment. Now here everywhere we are having a timeline. These are complete within 6 months from this, complete within 9 months from this, these or that. But sometimes there may be some court proceeding. There may be some other issues are going on along with the assessment, for which the SSC is not able to provide the details. Let me give some example. One scrutiny is going on of Mr. X. What is that? Scrutiny is going on of Mr. X. in between there is some court proceeding are going on and he need to attend those period or he is imprisoned for that period need to be excluded over here. So they are saying that following are the periods for which that need to be excluded. If you are given example directly going with valuation officer, if you are given the data to the valuation officer, yes, that period need to be excluded. If it is given to the settlement and rejected that period, so there are certain data has been given, that period you cannot include while making the calculation. Fine. So coming back and with the conclusion, what we have done, we have seen the assessment procedure starting from the self-assessment to next one was intimation to 143 and 147 and 144. See, section 153 is there, very important, because at final level, question normally when asked for the timeline, Mr. X, income tax officer has issued a notice to particular person for this financial year. Provide your inputs, judge the same, verify the details. Then you have to say that, sir, the original notice is not a valid notice. If original notice is not a valid notice, no assessment can be initiated. Order, if you give late, yes. So what we need to do, we need to verify with the statutory due date. I think assessment we have discussed 1 year, scrutiny 6 months, scrutiny order 12 months from the 11th assessment year. Early now it is 18 months. Earlier it was 12 months. Before that there was a scenario of 21 months also. 149, yes, you can go back up to 6 years only. Completion, as we have discussed, 9 months from the end of the financial year in which notice was served. So these are the timelines are there for the completion of the same. Fresh assessment. I hope it's clear. Yes. I think this two section we have read somewhere 140, 154, and another one is there also 155. Rectification of the mistake. Is it possible that there is some error in the order? Is it possible there are some error in the notice drafting or order drafting or calculation? Yes, it's possible at any of the level. It is possible at the income tax department level also. It is possible also at the level of SSC. So at that time, they have been given a time limit to rectify the same. As I have said, one section we already have discussed, that is defective written. If the written is defective, then SSC will get 15 days time to rectify under section 155. Is it okay? So that is available to you. Demand notice, I think I have shown you one demand notice over there. So I think I am fine with it. We have concluded second topic for the day, that is relating to it. Yes, I think we have probably okay. In which case it can be 16 years. Yeah. Okay. Yes, we have discussed, that the period is 4 years, the period is 6 years for assessment. Someone has asked the question for 16 years. Yes, 16 years is also there in case of some international transaction or normally in case of search or survey cases. That some data found at your premises or someone else's premises and it relates to you, then that period can be extended. Otherwise, no. Normal period is only and only relating to 4 years and 6 years, not more than. Fine. One small, very small chapter is there. Just I'm going to give you the one slide, not going in detail. If you think we can go, but I think it's a very simple provision. So I'm giving a glimpses of it, and precisely I will emphasize to you to read or calculate this 3 section. Otherwise, everything is fine in this. So hardly we are going to invest 10 minutes on this title, that is called interest provisions. Okay. Now, what is interest provision? As I have said, that we need to file our return in time. We need to pay the taxes in time as prescribed by the department and as described by the different things. Now, if I fail to do so, then there is some penalties, there is some fees, there is some imprisonment provisions also stated in the act, as well as very commonly, because Income Tax Act is a revenue law, so mainly they would like to focus on the part of interest. First one, just going to read the taglines, and later on we are going with the very interesting topic that's called tax planning. First one, failure to deduct tax and pay tax at source. You have failed. If you are failed to deduct tax at source and you fail to pay, at that time you have to pay some interest thereon, and the interest is at the rate of 1.5%, at the rate of 1.5% per month or part of the month is payable. Okay, am I audible? Okay, yes. Sorry. Next one, interest for failure to collect and pay tax at source. At that time also you need to pay the same. Very importantly, 234A, 234B and 234C, we are going to touch upon that. Now, what is that? First one, 234A. 234A is talking about interest on default of paying the advance tax. As all of you are aware that who is required to pay? Who is required to pay advance tax? If your tax liability is more than 10,000 rupees, if your tax liability is more than 10,000 rupees, then they are saying that you are required to pay the tax, you are required to pay tax in advance. Now, what is the in advance? In advance shows that by June, September, December and March. I think all of you are aware about these 4 dates are there. June, September, December and March you have to pay. So there is one word is stated over there, pay as you earn. As and when you are earning, you have to pay the taxes. So that is the basic rule available over there. So everyone need to pay the tax as and when. So they are saying that 234 B is talking about interest for default of the payment, advance payment of the tax. Another section is there, 234C. 234C is talking about for the deferment of the advance payment of the tax. Deferment. And 234A, that is talking about interest for default in furnishing income of return. Your due date of filing the return is 31st July, or it can be 30th September. So depends on the due date. It can be either 31st July, or it can be 30th September. If you fail to file by that time, you have to pay extra. Now take a note very carefully. Try to see over here what is 234A, 234B, and 234C. 234A will start once your 234A will start once your return filing date is crossed. Clear? 234A will start once your return filing date is crossed and there is tax liability. Okay, there is tax liability and the date is crossed. That's one thing. So I can say that for the previous year 1920, assuming right now due date is 31st July, and if I'm filing my return in the month of August, so I have to pay interest for 1 month under section 234A, provided there is some tax liability. Clear? Yes. Second point, interest for default in payment of advance. Take a note, all of you. I am very much try to clear on the part of the what I can say this period. I would like to focus on only and only on the period. On the period, you need to be careful that which period I need to focus. 234A will start once return filing date is crossed. Okay, once return filing date is crossed. Second, advance payment of tax, that is 234B, will start. 234B will start once 31st March is crossed. That means once previous year is over, so 234A will start from 31st July of particular year. 234B will start from 1st April. That is to say, once the previous year is over, up to the actual payment of the tax. And 234C will remain. 234C will always remain within a year. But 234C is that, sir, in the month of June, you could have paid 15%, but you have paid less. In the month of September, you could have paid 45% or 60% or 75% or 100%, but you have paid less. So there is a mismatch. There is a mismatch in the year. So 234C is confined. 234C is confined only for the previous year. 234B will start once the year is over from 1st April up to the actual payment of the date. And 234A will start from the due date of the filing return once it is crossed. Okay, so let me give a conclusion very simply. If I'm talking about the previous year 1920, I'm talking about individual, assuming that 31st July is the due date of filing the return, then 234A interest will start from 1st August. 234B interest will start from 1st April 2020 up to the actual payment of the date. 234A will start from 1st August up to the actual payment of the date or actual filing of the return. And 234C will remain. 234C will remain within the year itself. Is it okay? So these are the different interest calculations are there. They are quite interesting and you need to go through it. I have explained the period and the dates over there. Next one, if I don't pay the tax, if I default in the payment of tax, if I pay less amount of tax, then there is an interest liability on that. Yes or no? Then there is interest liability on that. So why not? If I pay more amount of tax, what is that? If I pay more amount of tax, then there should be interest to me also. They are saying, yes, sir, no problem. We are also going to give you the interest under section 234D if your actual payment of taxes are more than whatever is your tax liability. So if your tax liability is 10,000 and you have paid 15,000, you can pay either way of TDS, either by way of advance payment tax. Then we are going to refund you along with that interest. Clear? Check. Next one, fees for default in furnishing statement. If you fail to furnish TDS statement, then you are required to pay the fees for the late, and that fees is normally 100 rupees or 200 rupees per day of the default, not exceeding the TDS liability over there. This one 234F we already have gone through, as we have discussed that 234F is applicable for the delay of filing the return from due date up to December to March. 1,000, 5,000 and 10,000. So these are the things. I hope I need not to go in much of the detail of the interest. I would like to focus only on 234A, B and C as I have done, and the newly incorporated section is that 234F. So I wish that you should take into consideration 234F also. Fine. One more small interesting thing that might be aware, all of you are aware, but would like to add over here. Interest for failure to deduct and pay tax at source. I think all of you are aware. See, one more thing I would like to say again and again. You kindly please confirm in the question box later on that being a crash course, income tax considered as a one topic itself rather than number of sections are there or groups are there. I consider as a one topic only. So I wish to take everything from here to there if it is relating to us, right? Clear? Okay. Everybody knows section 194J. Everybody knows section 194J, that is talking about TDS on professional fees. If the amount of payment or the bill means credit or payment whichever is earlier is more than 30,000, then you need to withhold, you need to deduct 10% TDS and you need to pay to the government. Now try, I'm just giving a situation, you need to understand what is the implication of that. A company has deducted TDS, a company has deducted TDS of 5,000 rupees. So they have paid 50,000 to the consultant or a professional, and they have withhold 5,000 by way of TDS in the month of May. In the month of May 2020. As a rule, they have to pay by 7th of next month. As a rule, they have to pay 7th of the next month. So I can say that they have to deposit this tax value by 7th June, right? By 7th June, they need to deposit over there. Now, what happened due to non-availability, due to whatever reasons, not going into the reasons, but they failed to deposit by 7th. And they have deposited in the month of June itself, but instead of 7th they have deposited on 10th. So May TDS, repeating once again the question, May TDS due date was 7th June, but they have deposited on 10th June. Clear? So there is a delay, interest for failure to pay the taxes in time. So at that time, the rate of the rate of interest is 1.5% per month or part of the month. What is the word? The rate is 1.5% per month or part of the month. There is a delay of 3 days. There is a delay of 3 days on payment of May month TDS, May month TDS. Then the person, very important word I'm going to use now, the person, the assessee is subject to 2 months interest, May as well as June. because it is deducted in the month of what? May. 7 days is given to you by the department. But if you're paying after 7th, there is a delay of only 3 days, but you have to pay interest for 2 months. Take a note, interest for 2 months, and the rate is 1.5% per month. So I can say that even the delay is 3 days, they have to bear 3% interest on the late payment of the same. So that is quite interesting and very important while you are really working on those parts. Clear? So I think with this, I would like to conclude on this part, that is talking about the interest. I hope I have tried to cover all the things and things are moving well. Fine. As being it's a webinar, we cannot see each other, but I hope that I'm trying to justify the topic and able to take those important parameters which I need to take into the consideration. Yes, Tanmay, uh, anything want to add, or means I'm going with the next topic now?
Yes, sir.
Yeah. Okay, fine. Sure. Thank you. Okay. So what is next topic is, I can say next topic is tax planning. Okay. Now all of you try to listen me carefully. What is planning first with? Someone will say, sir, in crash course, how you can use the say what is planning? You know, everybody knows. But the things are there. I want to go to Delhi. What is that? I want to go to Delhi for 3 days. So I need to plan my trip. For that, I should be aware that my train journey is of 2 days. Two, return journey may be of 2 days. I need to stay there 3 days. So total journey is of 7 days. I need to plan accordingly which things I need to take, which thing I need not to take. So what is the conclusion of my words? My word says that if whenever you want to do some planning, you should have idea about the basic. If someone is saying that, sir, you need to go Ghana. I don't know where is Ghana. Is it in Ahmedabad, it is in Delhi, or it is in outside India? If I'm not aware, do you think I can plan anything? I can't do any planning if I don't know that place. One more thing, someone is calling to me, sir, come to USA, where they are saying Massachusetts, SMA करके कोई place है, Boston है या Houston है, जाना है. I don't know what is the temperature over there. In the month of December, it is cold, too cold, extreme cold, hot. If I'm not aware, can I plan my clothes? No. So what is very important, today I'm just going to discuss something about the tax planning, but practically I can say that I cannot discuss anything in tax planning. I cannot discuss anything in tax planning unless you know the basic, right? Unless you know the basic, what is the section, what is the benefit, what can be done, what cannot be done. So I assuming that all of you are having some basic good idea about that, and accordingly we can go with the this part. Which part? Text planning. Before text planning, in your module also, if you refer over there, they have provided 3 words. All of you can have speaking at their own places. 3 words are there. One is tax evasion, tax avoidance, and tax planning. We are not going to discuss these 2 words, that is tax evasion and tax avoidance. We are going to discuss more on tax planning. Why? Because tax planning is illegal. First point. What is the answer? Tax planning is illegal. Second thing, tax avoidance is, I'm not saying illegal, but tax plan avoidance is a tool used to avoid tax with malified intention. Clear? Tax avoidance is certain kind of tool, kind of vehicle, certain kind of transaction entered, so that your intention is mollified, and I'm sorry, intention is to reduce the tax. Whenever I'm talking about evasion, evasion is a purely mollified intention. You don't want to pay the tax. So I can say that tax evasion and tax avoidance both are not legal. If you caught, then you have to pay the huge amount of penalties, interest, and so many things. As far as planning is concerned, it is pure legal and valid. Fine. Okay. Now, just throwing just idea before going into that module plan. Right. What you can do in planning. See, very simple planning I am discussing about. I am doing a job. Let us think about individual planning. I am doing a job. I'm having a salary income, pure salary, no other income is there. I want to reduce the tax liability. What I can do? Best way, I can go with ATC. Invest for what? Life insurance premium. Invest for what? PPF. Invest in NSC. Invest in Sukanya Samruddhi Yojana if you are having a girl child. You can do stake saver FD and you can go ahead. So what is there on? By doing this activity, by investing in this, you can save around 1,50,000. 1,50,000 amount of investment depends on the tax bracket. You can save 45,000 tax. Now try to understand very basic thing. Why I'm saying basic thing first, so that we can go in a higher level. I am working. Suppose my spouse is not working. She's a housewife. She's not. She also is having a life insurance policy, or she is planning to take a policy, or I am planning to take. What I have done, I'm paying my policy from my account and she is paying policy from her account. Now the issue is what? If she is paying out of her own pocket, where she doesn't have any income, at that time, there is no tax benefit to her. So what I can do is very simple planning is there. I am going to pay her premium. I am going to pay her premium because for the premium, I am paying her the amount. So instead of paying from her account, if I pay from my account, I can say simple tax planning. I'm eligible for the life insurance premium. Myself, spouse, son, daughter, parents. Yes, or I'm talking about son and daughter. In case of son and daughter, they need not to be dependent on you. They can be minor, they can be major. If you are paying, you are going to get the benefit. So what is there on? These are simple plannings. Same way, let me go with a simple one more plan. One client is there who is willing to do 100% export business. What they want to do? They want to do 100% export business. And they say, sir, I want to start a business in Ahmedabad. I will say, sir, what you are going to do? They are saying 100% export oriented company. So I can say then, sir, why you start a business or place in Ahmedabad? Go to Kandla SEZ. Yes or no? Go to Kandla SEZ. They are saying, sir, we are IT company. Go to Keraheja SEZ, IT SEZ, Ganesh Housing SEZ, IT SEZs are there. Then in Changodar, we can say pharmaceutical parks are there. Then in Gandhinagar, hardware technology park is there. So if you go over there, you are going to get some benefit. So that is nothing but a tax planning. So tax planning can be done with a location. Cash planning can be done with the ownership. Tax planning can be done with the investment. Tax planning can be done with the structure. So many items are there. Sky is the limit over there. No one can say, sir, this is sufficient. No. Any amount of transaction or any amount of tax planning can be done over there. So it is based on you, how you read the section and how you do the same. Let's see one by one. As we have discussed, tax evasion, tax avoidance, and tax planning, we have just gone through. Distinguishing between tax planning, avoidance, evasion, and management. Management is a new word they have come up. So we can do this one. Let me ask one question, which we are going to discuss later on the third day, that is relating to international transaction. I think everybody knows that international transaction. I got this word just from this tax management. International, whenever international transactions are there, two parties are associated enterprise or related parties, then transfer pricing reporting is compulsory. There is one small person, small SME, small and medium enterprise is there. He is having a business over here, his father is business over there, and they are doing a trading between two people, then transfer pricing will apply. Once transfer pricing will come, you know it, I'm not talking about the tax point of view, but I'm talking about the compliance point of view. Compliance will be very high. They need to file that tax audit report as well as the 3C EAB report, that is talking about the TP report. You need to select a method of compliancing it. So it's a cumbersome to follow all the things. So what the SEC can do, I am using this word with relation to tax management. If you think that, sir, my organization is small, my volume is not that much big, so I don't want to go in that much compliance, that much detailed of the TP and all, I want to come out of it. So first option, don't do the transaction with the related party first. But he says, sir, it's not possible. Second point, we can say that if you are having intercompany investment, I think all of you could recall that the limitation is 25%. Yes or no? So if in X company and Y company there are common people or interested or related people having holding more than 26% or 26% amount is there as a shareholding, then TP is applicable. So what you need to do, if you are a small company, you don't want to go in much of the transaction or formalities, what you can do is you can keep the holding less than, you can keep the holding less than 26%, you can keep 24, you can keep 20, no issues will be there. Clear? Same situation, let me explain one for my another client which we have done. I have one client in Ahmedabad, or rather in Gujarat, let me be specific. In Gujarat, he is there. We have taken one FDI. We have taken some fund from the foreign company. FDI we have done. Now, also we have taken a loan from the bank. So banker says that you need to give a personal guarantee for all the shareholder holding more than 5% or 10% percentage of the holding. So if you are having a shareholder who is holding more than 10% of the capital, then you need to provide personal guarantee of that shareholder also. Now, see, I'm talking about the management. I'm not talking about the evasion or avoidance. I'm talking about the management, less paperwork, fast execution, transparency. I'm talking about. Now, for me, there is a problem. If I take a personal guarantee of the foreign person who is a non-resident, it's a very much time consuming and inconveniencing situation that I will call document, put signature, then make some notary over there. So it's quite difficult. So what I can do is, if I know this is the situation, I can say to these people, okay, sir, I want FDI in per person name, not more than 10%. What is there on? Not more than 10%. If I am a shareholder, then even I can offer to my client or to the company in which I'm investing, sir, I'm going to invest the value to that extent, my personal guarantee is not required, so that you can avoid certain kind of documentation and formalities. So that is all about the tax management. Objective of the tax planning. Yes, what is objective? Objective is always very clear. We want to minimize the tax. What is the word? We want to minimize the tax, or we can use the word we want to optimize the tax payments. Let us do the tax planning in that good way so that we can have lower tax burden on us. Lower tax burden can effectively reduce the cost and we can have a good thing in the market. Next one, essential of the market, types of tax planning, areas of the tax planning, form of the tax planning. One by one we are going to see. I am not going to discuss this one, that is talking about the evasion and this. We are just going to start with the tax planning. Yeah, see what is the objective? Reducing the taxable income, deferring the payment of tax to the extent possible. Now, all can recollect somewhere what is reducing the tax liabilities and what is deferring of tax liabilities. Reducing tax liabilities means net tax will come down, and deferring tax liability means I need to pay the tax after some time. So I will be given a tax holiday in the beginning year, and later on I need to pay the higher amount of tax or taxes on a later on period. So I can do that planning, and accordingly I can select a method, deferment of tax planning, which will help new company, cash crunch company, less cash company to well establish, and they can pay the taxes on a later period. Is it okay? So that can be done over there. Yes, they have given this example: tax planning, avoidance, evasion, and tax management. I am not this. I would like to just show over here one word over here. Tax evasion is illegal, both in script and moral. Tax avoidance is a practice of bending the law. What is the word over here? Bending of the law without breaking it. What is bending of the law without breaking it means? Try to misutilize the provisions of the income tax or any law. That is called bending of the law without breaking it. Tax planning, yes, it's a practice to follow the provision of law within the moral framework. Management, it is implementation, execution of part of the taxation department of an organization. So that is the, once planning is done, we can do a good execution of it also. So that is that. In all, if I see over here, in all the four parts, ultimate aim is what? Ultimate aim is to reduce the liability, but here it is unfair means, here is a biased means, and here it's a moral of the law, that is illegal, right? We are ignoring the approaches and that. Yes, you can see over here word, very important word, frequently used in income tax. It is the concealment, right? It's a concealment of the taxes. Okay, objective of the tax planning, as we have discussed, reduction of the tax liability, minimization of the litigation. Yes, very good. Now, what is minimization of the litigation? As I have discussed earlier also, just a minute back, in relation to transfer pricing, what I have said, if you want to reduce the paperwork sometime, then also it is a part of your tax planning. See, I am having a transaction between the related party, associated party, international transaction is there. So I have to go for transfer pricing audit. The only problem with me is transfer pricing audit requires some higher cost. It requires some maintenance of huge amount of documentation. So that is the only concern. Otherwise, I'm okay with it, right? Otherwise, I'm okay with it. So if you want to minimize the litigation, or minimize the documentation, minimize the procedures also, you can go with that, right? Okay. Along with minimization, एक word याद आया है, आपको बोल देता हूँ. If you have heard the word LUT in terms of GST, letter of undertaking, if you take LUT, then whatever sales you entertain, either outside India or to the SEZ unit, you need not to charge the client, and you can say, or you can do it free of cost, right? Another option is, if you don't go with LUT, letter of undertaking, if you don't go, then what you need to do? You charge the GST, and that fellow is going to take a refund. So directly or indirectly, it's one and the same thing. But if you want to remove or reduce the transaction or minimize the litigation, advisable is to go for a LUT. Same way you can do this kind of procedure. Another one is a productive investment. Reduction in tax liability is indirectly going to have higher profits. So we can say that your investment could become a more profitable. Example, let me give example. I want to invest 5 lakh rupees either in FD, either in mutual fund. What is there on? I want to invest either in FD, either in mutual fund. What I can do is, if I'm going with the mutual fund, then whatever amount of dividend received will be exempt. So I can say that effectively my rate is going higher. If I'm going with the FD, then the tax liability will be there. So indirectly, it's going to reduce my return on the investment. So that can be point need to be considered. Another thing all of you are aware, I'm talking about individual tax planning. If you are investing in PPF, if you are investing in PPF, the PPF rule, you know that whenever you are going to invest, you are going to get tax benefit under Section 80C. Whatever interest is generated, that interest is 100% exempt. Whenever you are going to redeem it, at the same time, redemption amount is also exempt. So what is there on? You can do this kind of investment so that your effective rate is high. Some people will say to you that, sir, in PPF rate of interest is hardly 7% or 6%. But if I say, if you calculate effectively, it goes very high. Next one, healthy growth of economy. Yes, for the healthy growth of the economy, it's needed. Economic stability, yes, you can do that. Now coming with the essentials of the tax planning, how you can do tax planning. They are saying that updated knowledge of the tax along with the circular notification, clarification, and administrative instruction issued by the department or the CBDT. So base condition is what? If you don't know where you want to go and you do planning, it will be failure. Yes or no? So we can say that you must have the knowledge of the basic law, and then you can go for it. It's a good thing. Disclosure of full and true material information. Avoid sham transaction of making believe transaction or colorable devices. You should not use sham, that is we can say clone, or you should not use some colorable devices. Colorable devices means what? You are making 2-3 companies, you are paying salary, high salary to your relatives, and certain kind of you are making some vehicles or devices. That should not be done. Foresight of the future development and changes in enterprise goal. Yeah. All of you, please see over here. Yes, all of you. What we are going to say on this part. You must have some foresight. You must have some idea. You must have some clarity of the vision. What the government is willing to do, what the finance department is expecting, and then you can do some planning. Otherwise, what happens? Your planning will be very fruitful in the year 1, but it will become 0 in the year 2. Okay, what is the situation? Your planning will be very good in the year 1, but it will become negative in the year 2. So what we need to do, let me see this, give the example. Whenever there is a budget, instead of reading the script, instead of reading the white paper of the budget, we need to see the motion. We need to see the objective while some section is added or some section has been removed. Example, let me clarify you. Since last number of years, all people are saying that, sir, we want reduction in MAT liability. Everybody knows MAT, minimum alternate tax. Every company or the other than company, they are there in the tax-free zones. They were saying that, sir, why don't you reduce the tax liability under the title MAT, so that it becomes very good to be there in the economic zone or the free zones. Now, what the government has said in the last budget in that speech that we are going to reduce. What we are going to do? We are going to reduce the tax liability from 30% to the corporates to the 25%, and from 25% to 22%, or lower rate over a period of time. They have said 3 years back. So one should be very clear that the government is having a revision to reduce the tax liability and to make MAT and tax as same. What they want to do? They want to do MAT and tax as same. So indirectly, they have no vision, or they have no intention, rather than vision, I should use the word, they have no intention to reduce the MAT liability. So now you can see over here, in today's time, corporate tax rate has came down up to 22%, and in case of a new manufacturing company, the rate has came down up to 17%. So now, if the rate is 17%, if you are new manufacturing company incorporating in the current years, then the rate will be 17%. So would you like to go for 17% rate, or would you like to go in SEZ and pay 15% rate? So now there is a no difference between SEZ and that. So you should be clear what is the long-term intention of the present government, or the likely to be the future government, and accordingly you can make a tax plan. Yes, again, very clearly telling to you, short range and long range tax planning. What is there on? What is short range and long range tax planning? Take a note over here, all of you. I am working and my salary, I am working and my salary is 5 lakh rupees a year. I'm just giving examples because tax planning cannot be taught. Is it okay? Tax planning cannot be taught. Only the ideas can be shared, visions can be shared, examples can be shared along with the titles. One of the title is short range and long range. Please try to understand it very clearly. And this is a day-to-day tax planning can be done. I am working and my salary is 5 lakh rupees a year. My wife is also working and her salary is right now 4 lakh rupees a year. Clear? I am earning 5 lakh, she is earning 4 lakh. Clear? Now we wish to take a housing loan. We wish to plan a new house and we wish to take a housing loan over there. Now looking to my qualification, looking to my wife's qualification, spouse qualification, I think that my salary will remain 5 lakh, 5 lakh, 5 lakh over 5 years time. I'm not expecting that there will be high increase in my salary. But I found it very clear that my wife is having that much qualification and a company where she will have a jump of 4 lakh to 7, 7 to 10, 10 to 20 within a very short period of 1.5 year, or like that. Now see over here, if we are planning to go for a housing loan, we don't want to take a housing loan in combined name. We want to take a loan in separate name of each person. Then as a long-term planning, I can say that I should buy or I should take a loan in her name, not in mine. Agree? I should take a loan not in my name, I should take in her name. It becomes a long range tax planning, because you know it very well, housing loan interest is allowed as a deduction in house property, section 24, as well as same is allowable in section 80 somewhere. ATC, right? So that is called short-term and long-term planning that can be done. I'm not reading from here. This will be the additional example for you. Next one, permissible tax planning. Tax planning you can do is permissible. Yes, again, I'm going with the same examples. I am working, my wife is working. I'm expecting her salary to go in a long run. My salary is also there. I'm not expecting much increase. I'm expecting normal increase in my salary. Now, if I invest in life insurance premium 3 lakh rupees, if I invest in life insurance premium 3 lakh rupees, everybody knows it very clearly. I cannot take a benefit more than 1.5 lakhs. I cannot take more benefit more than 1.5 lakhs. So rather, what I should do is I should go with my investment maximum up to 1.5, and remaining 1.5 I should transfer, or rather I should make investment through my spouse name, so that it becomes a permissive tax planning with the limited amount of 150 limitations. At the same time, we both should get the maximum benefit out of it. So that is purposive tax planning. Purposive tax planning is based on the circumstances of the law. The permissive tax planning has the expiration sanction statute. Okay, now just try to understand over here purposive tax planning. What is purposive tax planning? Yes, I think everybody knows this one. Clubbing provisions are there. Now, if you think, see, we as a professional, we need to be clear for all kind of contingency in the business. If you think that there are two partners are there, they are doing a business. Maybe there are two brothers are there doing a business. They might be buying the asset or the properties in the individual name, group name, this name or that name. So accordingly, we need to plan. What we can do is, rather than compiling all the detail assets, rather than compiling all the asset in one roof, we can spread also. Example is partnership firm. In case of a partnership firm can have all the assets, or partnership firm can distribute the profit, and the partners can buy in their own names. If we think that yes, in long term we want to have equalization of the property, all must have good enough property, what we need to do is purposive tax planning. I'm talking about the purposive tax planning. That is means I want that my wife must have X, Y, or Z value of amount every month of her own rather than me. I want my children. Let me give one simple example of this one, purposive tax planning. Let's see over here. I have explained one, Sukanya Samruddhi Yojana. Yes or no? Sukanya Samruddhi Yojana, it's an excellent scheme available where if you have a girl child, and she is less than 10 years below, you can open an account for her. Suppose what I'm doing, purposive tax planning, I'm opening SSY account in my daughter's name, Sukanya Samruddhi Yojana in my daughter's name, and I'm investing 1 lakh rupees every year. Now, what is the purpose? Two purposes are there. One, I am going to save tax on 1 lakh every year. One aspect. Clear? Second thing, this account, Sukanya Samruddhi Yojana, or another word is Public Provident Fund account. This two account is having a lock-in period of 10 years or 15 years. PPF, there is a lock-in period of 15 years. Sukanya Samruddhi Yojana is having a lock-in period up to the age of 18 of the girl child. So in both of the scheme, my lock-in period is large. So what happened? I am doing the purposive tax planning. It's doing a long-term planning. Every year there is a tax benefit, one answer. I cannot withdraw, another answer. And third one, my daughter is going to get a very big amount, tax-free amount at the age of 18 or at the completion of 15 years. Clear? So these are the examples we can have the purposive tax plan. Next one, now they are saying that which are the areas where you can do tax planning. Yes, one by one we can see form of organization or ownership. Form of organization or ownership. That can be done. Okay, now let me give this example. What can be done for the form of organization? If you think that there are two people, there are two persons who are willing to start the business together. They are willing to start a business together and they already have huge income. What is the situation? They already have huge income and this one will be the extra. So if they want to reduce the tax liability in individual name, if they wish to reduce the tax liability in individual name, I will suggest that they should go for a partnership firm where partnership firm will pay 30% flat tax and whatever is the profit becomes 100% tax free. Whatever is the profit becomes 100% tax free in the hands of the partner, right? So that can be the structure. Now second situation, there are two persons who are generating income, who are having extra income, huge amount of interest, and they don't want cash flow in their hand. They don't want cash flow in their hand. They want everything to be compiled up, and also they don't want to do much of the tax planning in their individual hands. So what can be done? We can suggest that they should go for a private limited kind of structure. What we can suggest? We can suggest instead of partnership firm, we can suggest a private limited kind of structure, so that first point is tax liability for partnership firm is 30, come down to 22%, 17% or 25% as the case may be in the hands of private limited company. Next thing, as the tax liability is coming down, the owners are not in need of the cash, so they are not going to withdraw anything out of it. But if they want to make some property, partnership company can have their own building or can have their own assets, which can be given to the directors or the shareholder as a perquisite, rent-free accommodation, rent-free furnished accommodation that can be done. So what you can do is you can decide the organization structure depending on the income and depending on your long-term objectives. One more simple format, let me explain now. That's the very simplest format of all, that is proprietorship firm. If you think, sir, I want to start a business, I may not find it very huge amount of turnover. I don't want to involve number of people. I don't want to incur a huge cost at the initial stage. Go for proprietorship firm. Nothing is required. Very few formalities. With your PAN card only, you can start a business, and your business will flourish. Yes or no? So that is also the we can say tax planning in terms of the ownership. Next one, locational aspect. Now what is locational aspect? I'm not going with the production kind of locational aspect that I must need raw material easily available. This one, no, we are not talking about those aspects. I'm saying that if you start a business in SEZ, tax free. If you start a business as 100% UI, tax free. If you start a pharmaceutical company in the northern area, that is to say Assam and this side, you are going to get 100% tax benefit. At the same time subsidy, at the same time subsidized rate land is available. If you start a business in the Kutch area where there was earthquake affected area, you are going to get the benefit. So you can decide the location also. You can decide the location also based on the tax benefit. Now, tax benefit is not only the aspect. Sometimes the conveniency of the location and tax benefit that can be done. Example is if you are exporter, you should select your location near to airport, near to seaport, or near to the facility where transportation are easily and quickly available. If you start in the Madhya Pradesh of export business, then you have to send your container either to Bombay, either to Kandla or somewhere else. So what you need to see, your goods is fine for sea transportation, air transportation, and they are. Next one, nature of business. Now, nature of business. Let me ask you, or you can answer at your own area of premises, that whenever I say nature of business, I would like to say that there are certain businesses are there where you cannot avoid the structure. Example, if you're aware, then well and good. If you're not aware, let me tell you. Internet service provider, ISP, if you heard this word. GTBL is providing internet, Tata is providing internet, BSNL is providing internet. If you want to start a business of internet service provider, there is a rule that you cannot do the business of ISP without private limited structure. Compulsorily you have to go for that. Next one, if you want to go for IPO, if you want to go with a market, BSC listing want to do, you have to go with a particular topic. Yeah, so these are the things we can say tax planning in the nature of business that can be done. Now going ahead with the tax planning in relation to corporate restructuring, financial and employee remuneration. Okay, yes, it is already 12:45 or something. So I wish if there is any question from your side for the topics which we already have covered. We have covered the return of filing, assessment procedure, interest, and some of the tax planning criteria. So if we have question, I would like to take a question answer for 5-10 minutes, and then we can the next day we can go for the balanced tax planning structures. Okay, I think my voice was not audible. Okay. One person has asked the question, what is the difference between circular, notification, clarification, administrative instructions? Okay. See, whenever the law is made, income tax law is made, then there are certain sections are there are provisos are there. Notification means what? If they think, if income tax think that we have made clarity, but still something is not clear, they want to give you some instruction, then they can issue notifications, right? Example right now, not recently there was one example but just forgot, that they have issued one section. Let me give this example, section 44AD. Everybody knows section 44AD. What is that? It is this one, we can say presumptive income. If there is a person not engaged in the business of real estate and his turnover is less than 2 crore rupees, he can declare 8% as an income, and he need not to maintain the books of accounts and audit. Now, when section 44AD came, then there was a problem from the professional. Professionals were saying, sir, is it applicable to us or not? There was a dilemma in that. So they have clarified it clearly by way of issuing notification to section 44AD dated that this section is meant for a business, not for a profession. Clear? So what is notification? Notification is something more explanatory in relation to section. Circular is an internal communication between the staff, internal communication between the department. So they issue some circulars, internal circulation, but which are publicly available, right? So that is that. Administrative instructions, I think we can say ki government will come up ki let us take a scrutiny of this. If you are depositing more than X or Y value in the bank account, then it is subject to scrutinization or verification. So that can be done. Okay. Next question asked by Nirmala Panchal. She is saying that agriculture product. Yes, I think we can say agriculture product if you are going to engage over there. Yes. Okay. As I have said, tax planning is very dynamic. You cannot be static. This can be the tax planning or this. No, it is always a dynamic and keep on moving. So I can say that whenever you say agriculture product, if you remember section 33 AB, or I think section 33 2 AB, I'm not sure, tea, coffee and rubber development account, there is one basic condition. SSC must be engaged in growing, manufacturing and generating. All the three things are there: growing and manufacturing in India. Growing and manufacturing. So if you are only growing tea, you are going to get the benefit of agriculture only. If you are going to do only manufacturing of tea, you are not going to get any benefit, neither of agriculture, neither of the tea development. So what you need to do, if you do both the things, because it is said in which section? 33 ABA. Probably AB is there, section 33 AB, which says that if you are engaged in growing and manufacturing both, then you are eligible for so many benefits. So what do you need to do? If you wish to go in rubber, if you wish to go in coffee, if you wish to go in tea, go with both, not individual. So that is can be done. Sir, please share your number. I will share at the end of the session. Do residents with only agriculture income exempted, says 25 need to file return? See, if you are having only agriculture income, if you have only agriculture income, 100% it is tax free. Value can be 2 crores or it can be 100 crores, right? But if you have agriculture income as well as other income, if you have agriculture income more than 5,000, as it is stated over there in the Income Tax Act, 5,000, and other income taxable or exceeding basic exemption limit, then partial integration is must. So agriculture income is not taxable, but you need to combine and you have to offer some higher tax rate over there. So that is clear. So agriculture pure 100% exempt. Combination of both, yes, partial integration is there. Your normal income is subject to some higher rate of taxes. That's it. Otherwise, there is no. Okay, very clearly, I think I'm answering to Kalyani Deshmukh that she has asked a question. What if agriculture income from other country and remitted to India, is it taxable? See, if you go through the agriculture income provision, they are saying that agriculture income is exempt. What they are saying, agriculture income is exempt provided the agricultural land is situated in India. Got the point? So if you have agriculture income from any other country, no, it's taxable. Agricultural land must be in India, otherwise it's taxable. Yes, a very good question is asked by Vishakha Mishra. Sir, what is the difference between service not is issued and not is served? Take a note of this. What is the difference between not is issued and what not is served? Give me a minute. Okay, there are certain sections are there in income tax which says that you need to reply within 30 days from the date of service of the notice. What they are saying, 30 days from the service of the notice. Service of the notice means I just have came up with a notice over here so that it can be clear. It is our service tax notice, but I would like to show you over here. You may not able to read, ignore it, but I'm just showing that this notice is that the date is 23rd September 2020. What is the date? 23rd September 2020. Take a note, September. And here they have said that you have to comply within 30 days of the receipt of the notice. What? 30 days of the receipt of the notice. So this date is irrelevant. I'm least concerned with the date when the assistant commissioner signed. I'm not going to do anything. I have one tag over here where I have kept the document, everything, which says that, sir, I have received this notice on 16th October. What is that? I have received this notice on 16th October. So my 30 days will start from 16th October instead of 23rd September. Clear, Vishaka? So there are certain sections are there in section 142 where they are saying from the date of serving the notice. In some of the section they are saying from the receipt of the notice. One example I would like to quote in receipt of the notice, assessment order under section 143.3, scrutiny assessment, they are saying that you are going to get 60 days time. You are going to get 60 days time to file appeal from the receipt of the order. What is the word? Receipt of the order, not issue of the order. So whenever you are going to get by way of post, by way of a mail, or by personal taker of the notice, yes, you can take 60 days from the receipt. Next one, what about agriculture income of a non-resident? Yes, non-resident agriculture income is taxable. Okay, thank you, understood. I think I have tried my best to cover up all the questions, and in this 3 hours time I have tried to cover majority of the part. And with this I'm concluding. Thank you so much for your patient listening, and I'm having a session for the next day also. So if you have any question or concern from this topic also, we can discuss on the next day also. Right? Next day I'm planning to take balance portion of the text planning. At the same time, we are planning to start I think something with case studies or international as the case. Right? Thank you. Yes, thank you, Tanmay.
Of the program. Thank you so much.
Yes, thank you. Yes, Tanmay, I'm closing the meeting now. Right?
Okay, sir. Okay, thank you so much.
Yeah. Thank you. Thank you so much.
Bye, sir. Bye. Bye.
Bye. Yeah, have a nice day.